Hey guys, good afternoon, everybody. Today is Monday, October 10th. It is 1:56 p.m. right now. Our scheduled mentoring session is for 2 p.m. So I'm on a few minutes early. As you guys know, we didn't have a mentoring session, or we didn't have a live session today due to the US and Canadian holiday. Most markets are closed. So you guys can see the market was kind of moving a bit crazy early on. And then it just started to just flatten out basically in the past hour or so. So we'll go over a couple things today. I think the main focus for today's session is going to be the K2 SR or the Kodi SR rejection scalp strategy and the V1 variation. So it's gonna be a few moments to finish setting this up, and then we'll get started shortly once I send this link out to everybody here. A couple more things here to update. One thing right here. A few more things right here, and we should be there. All right, solid. So with that said, let me get this link sent out to you guys here in the premium, and then we can get started with our session shortly. All right, links posted. I'll give it a few moments for people to make their way in. All right, solid. So I'll give it a few moments for people to join in. And I'll put the requirements for the K2 SR rejection here. SR rejection strategy. All right, cool. So let's get a few moments for people to start joining in. I did start a little early today, so people will start to trickle their way in shortly. Post this up over here as well. All right, guys. So good afternoon, everybody. Today is Monday, October 10th. As most of you guys know, there was no live session today due to the US and Canadian holiday. As I mentioned earlier today, our main focus is going to be the K2 SR rejection strategy and the variation V1. So if you guys have any specific questions, feel free to put your questions in the chat. But for the most part today, we're going to be mainly focusing on the K2 SR rejection strategy. I'm going to go over examples of buys and sells, and I'm also going to go over the variation V1s since we're getting closer to a directional market, and it's going to allow us to take more entries, applying a lot of our previous strategies that we used to apply. So let's start off with the K2 SR rejection strategy here. Let me see if I could find an entry here. I think there's one right here. So just going off this right here, I already know there's going to be a sell here because I can see the trend meter is red. So looking at the requirements here for the K2 SR rejection strategy, for the sell here, you want to identify a top wick rejection of K2SR V2 zone with a moderate red candle. So to identify that, you want to turn on your K2SR V2 indicator right here. Typically, this is how the market would look without, or how your charts would look without any indicators. So this is basically a blank chart, right? It's nothing on there. Once you turn on the K2 indicators, the main indicators for the strategy would be the K2 SRV2, the K2 trend meter, and the K2 pivots here. So with that said, we have all of these lined up on the chart. First requirement, you want to identify a top wick rejection off the K2 SR zone with a moderate red candle. So with that said, I'm going to go and just identify where this candle is wicking off, which would be a couple areas. There's actually one zone right here. There is another zone right here and another zone right here. Just for demonstrational purposes, I'm going to take off the actual indicator to clean up the chart so that you guys can see things a lot better here. I'm going to turn off the K2 SRV2. I've already identified the zones here, so you don't really need the indicators once you've identified them. Next, I'm going to turn on the K2 momentum indicator because we need that as well. So for the first requirement, you want to identify a top wick rejection off a K2 SRV2 zone with a moderate red candle. In order to identify the wick rejection, you just want to look at the wick, make sure it's pushing off one of the zones here, which it clearly is. That's going to be the first part of the first requirement. Second requirement, you want to confirm that it's a moderate red candle. In order to confirm that, you just want to measure the wick below and compare that to the body of the candle. As long as the body of the candle is bigger than the bottom wick, then that would be considered moderate. So right here, you can see the body is about 80 pips, while the wick on the bottom is only 30 pips. So it's bigger than it. It's pretty clear there. No questions asked. It's pretty straightforward. That's going to confirm that it's a moderate red candle. It doesn't have to be a strong red candle. It just has to be moderate. It just can't be bigger than the body. So with that said, we have the first requirement here. We've identified a top wick rejection off the K2SR zone with a moderate red candle. Second, you want to confirm that you're trading in the direction of trend using the K2 trend meter. So with that said, we're going to look down to the trend meter down here. It's currently red, so we are looking for sells. Secondly, you can use the K2 pivots to identify a second confirmation. So basically, when the pivots are overpriced and when the pivots are angling down, that's going to confirm that price is trending downwards. However, to confirm that it's a strong trend, you just want to make sure that the red pivot is over the green. Right here, you can see that it's not over it, but you can see that it's attempting to go in that direction. So as a second confluence here, you can see that it's attempting to make its way down there. However, the main confirmation here would be the trend meter. So with the trend meter red, pivots angling down, price below the pivots, you can basically anticipate that price is going to confirm the downwards direction. With that said, we have the second requirement here met. Third requirement, you want to confirm that you're trading in the direction of momentum. In order to do that, you want to look back to see the most recent momentum signal and confirm that it's red. So this candle right here actually has a momentum signal on it, which is perfectly fine. This just confirms that momentum is making its way to the downside. Once you have all those requirements met, you can enter on the open of the following candle. So with that said, you're going to enter a short position right here. Your TP stop loss is going to be 100 pips TP, 300 pips stop loss just for that cushion. And in order to make sure that this candle here is okay and it's not too big, you just want to make sure that this this candle is not farther back than the stop loss, because typically if the candle is too big, price will generally push back either half the candle or the full candle, and then it'll make its way right back down. So if it's like this is perfectly fine because price can retrace up that far and you'll still be in the trade. But eventually it'll probably come back down and hit your TP. With all the requirements met, you let this trade run, and there you go, full TP with basically no drawdown for a sell. And that's an example of a sell for a K2 SR rejection. There goes one example there for a sell. Next up, I'll show you an example for a buy here. I think there were a couple here. It was a little choppy, but I mean, I wouldn't be trading around this area because this is so late in the session. Also, it was a holiday, so I'm just using this as an example to show you guys possible entries, not exactly entries that I would personally take myself, but I'm just using them as examples. So just keep in mind that when I do apply these strategies, I typically only apply them from 6:30 to 8. You can apply them after, but it gets riskier as the day goes on, especially if you're trading on a day like today, which was a holiday. You can see that the market kind of like gapped around here. There's a big gap right here, actually. Gap in pricing, lots of crazy movements. There was just no direction because the US market was technically closed today. So this was an example for a sell. I'm going to show you guys one more example for a buy, and then from there we'll move forward with any questions. If you guys have any questions regarding the K2SR rejection strategy, just feel free to put your questions in the chat. If there's any confusion here, let me know so I can clear anything out for you guys. But I think we have one entry right here. Actually, this candle might be a little too big. Yeah, candle's a little too big, so that wouldn't fit the criteria. See this real quick. All right, so there's another one right here. I'll just use this for an example. It's not a good entry, but I'll just use this as an example to show you guys a buy. Let's see who's here. Emery, good afternoon. Good to see you here. So yeah, hopefully all you guys had a great weekend. Just a reminder, if you guys are just joining the room, we didn't have a live session today because of the US and Canadian holiday. I didn't trade myself. It looks like some people in the group did trade. I was just looking at the profits from today. Valentine traded today. He locked in 1,644. A couple wins, couple losses, more wins than losses, obviously. But you can see that his profits were kind of all over the place, right? So it was a choppy day today. Also, Dejan over here took a trade as well earlier this morning, locked in 33 for the day. Nice work, Dejan. Rick over here as well. He took a couple trades, total profit of 3,099. He had 2 losses today, but mostly wins here. So we did pretty good overall. But yeah, I didn't really trade. Well, I didn't trade myself. So these are pretty much all the profits that people have posted today. If there's any other profits that you guys have and you want them to be posted, just post them in any group or send them to me, and I'll add them to the to the postings later this afternoon. But back to the examples over here. So I just went over a sell example for the K2SR rejection strategy. This is going to be another example for a buy. So same thing that we were looking at earlier, except now that we're looking for a buy, we're going to look at the top requirements here. It's basically the same thing, but in the opposite direction. So for one, you want to identify a bottom wick rejection off a K2SR zone, which should be right here. Second, you want to confirm that it's a moderate green candle. As you can see right here, there's like little to no wick on top. So this is obviously going to be a strong candle, which is better than a moderate candle. It's not required to be strong, but this fits the criteria. So requirement one's been met. Wick projection off structure, moderate green candle. Second confirmation, you need to confirm that you're trading in the direction of trend. As you can see down here, the trend meter is green. So we're definitely trading with a bullish bias. For second confluence, you can look at the pivots here. Price is above the pivots. Pivots are angling up, green pivots over red. That's going to confirm that we're in a strong uptrend. So with that said, we have requirement number 2 met. For requirement number 3, you want to confirm that you're trading in the direction of momentum. In order to do that, you just want to look back at the most recent momentum signal. As you can see right here, the most recent one is a buy signal, a green buy signal. And this is going to confirm that you're trading in the direction of momentum. Because if we have this here, we can already anticipate that momentum is going to continue pushing up, right? After you have all those met, pretty much same requirements as a sell, just in the opposite direction, you can take a buy right here. You'll set your TP at 100 pips, stop loss at 300 pips for some cushion. And we'll let the trade run right here. As you can see, some drawdown. This is why we have a wide stop loss, because you need to have cushion here to cover the spread and to protect your position from retracing back before it actually pushes up and hits TP. So push it down a little bit, some drawdown. And then after that, it comes right back up and hits the full TP. So whenever we enter these trades, guys, I know a lot of people don't like trading with the negative risk toward. The reason we trade with the negative risk toward is for the cushion. Whenever we enter a trade, we don't take bad trades. So we only look for good trades. Our trades are always quality. So you shouldn't be worried about hitting stop loss. Your main goal here is for it to hit your TP, which most of the time it will, as long as you guys follow all the requirements. You don't take any shortcuts, and you guys just follow the rules as they are mentioned throughout the strategies here. So there goes an example for a buy there. If you guys have any questions regarding the K2SR rejection strategy, go ahead and drop your questions in the chat. Otherwise, I'll continue going over some more examples here if I can find any. And if not, then we'll move on to the V1 variations. So let me see if there's any other entries here that I can use. Today's not a good day to find examples because obviously it was a holiday, so you're not going to find too many good entries here. But if I see anything here, I'll just show you guys. This is just for demonstrational purposes anyways. It's not like I would have traded during this period. I would have traded during 6:30 to 8, which is not around here. But let me just go back, see if there's any other examples to show you guys. No, I probably wouldn't have taken. I mean, honestly, I wouldn't have traded any of these trades because it just wasn't a good time to trade. You guys can see how the market was moving. Like if I take off the SR, you can see how the market was super choppy because you can see the big wicks over here. Price was actually ranging like 1,000 pips during this period from like 6:30 up until 7. Price dropped below here and then it just ranged more down here. So there was a lot of choppiness in the market, not exactly the type of market I would have wanted to trade in. And that's the main reason why I didn't trade today. You guys can see how a lot of these huge candle wicks over here are really big. Like this one over here is huge. You could get caught in a lot of nasty moves if you take any trades during these market conditions, because you can easily get spiked out, especially for these here. If you measure these wicks here, if you entered at a trade and it spiked on you, you hit your stop loss because it pushed at least like 450 pips. If your stop loss is 300 pips, you probably would have gone stopped out before it hit your TP. So hopefully nobody lost any trades today, because I didn't take any trades, so I didn't make anything or lose anything. Some of you guys here did make some profit, but overall it's been pretty solid for whoever posted profits. Kenny just posted a video. He said Biden to announce recession in the US 6 to 9 months from now or 1 year late. Thanks, Kenny, for this. Let me check this real quick. Just want to see if this is a credible. Yeah, Golden State Times. Yeah, so this is breaking news. U.S. government will announce recession in about 8 to 9 months, even though it started in June. Interesting. Yeah, people said they'll declare recession to 2024 and blame the new party. Yeah, I mean, no surprise there. I mean, we've been talking about it for, I don't know, months now, that we're going to a recession. So no surprise, but thanks, Kenny, for that heads up. So we'll see. I mean, we'll see how the market plays out. It doesn't really affect us too much whether we go into a recession or not. We'll find ways to make money in the market either way. So it's not a big deal for us here. And it's not something that you guys should be really worried about, as long as you guys focus on your trading. If you guys can focus on your trading and keep mastering your skills in trading, then you should have no problem making money, in a recession, out of recession. It doesn't really matter, because we're buying and we're selling. So it doesn't matter if price goes up or goes down, as long as you can, read the charts and identify these entries. This is actually like one of the best times to scalp, because with the market so volatile, you're not going to have problems, taking trades and finding direction there. So I think we have one more example here for a buy. Let me see if I can find this real quick. Measure the wick. Okay, so one more example over here for a buy, and then we'll move on to any other questions if you guys do have any. But let me just go and just draw a zone here. So as you guys can see, there's a K2SR zone right here. What I'm going to do is I'm going to draw another zone over it manually to clean it up. So as you guys can see, it's kind of messy here, right? There's a lot of zones overlapping each other. What I'm going to do here is I'm going to turn this off so that you guys can focus on what's important here, this zone. So with that said, we have an example here for a buy. Using the requirements here, identify a bottom wick rejection off the K2SR V2 zone. There's a wick rejection right here. And you want to confirm that it is a moderate green candle. So I think this is a problem that a lot of people run into. It's just identifying if the candle is moderate or not. In order to confirm that, just use the measure tool here and measure from the body of the candle right here, which you can see is 80 pips, and compare it to the top wick. If you're looking for a sell, you're going to do the opposite. But if you're looking for a buy here, you just want to make sure that the top wick isn't bigger than the body. Right here, it's double, right? It's double the size of the wick. So this is considered a moderate green candle. We have the first requirement met right there. Second requirement, you want to confirm that you're trading in the direction of the trend. Looking down at the trend meter here on the bottom, you can see the trend meter is green. So with that said, we have a bullish trend. Looking over here at the pivots for a secondary confirmation, you can see that the pivots are angling upwards. Price is above the pivots. The green pivots over red, and that's going to confirm that we have a bullish trend. So with that said, second requirement is also met. For the third requirement, you want to confirm that you're trading in the direction of momentum. In order to confirm that, you want to look back at the most recent momentum signal here. You can see it's a green bullish momentum signal, and this is going to confirm that momentum is going upwards. Once you've met all those requirements, you can enter on the open of the following candle right here. Your TP is going to be 100 pips. Stop loss is going to be 300 pips. You let the trade run. And there you go, full TP. One thing that I started to notice, guys, because you guys have seen, like, for the past couple of weeks, I've been taking pre-market trades. I've kind of changed up my schedule in the morning. So early in the morning, I get up around 5 o'clock Pacific time. So typically when I wake up at 5, I generally see a lot of good entries here around that time period. So I usually take my pre-market trades around 5, and then I usually go for a morning run around like 5:30, or sometime between 5 and 5:30. And then from there, I usually just let the trades run and hit my TP. So if you guys want to take some pre-market trades, from what I've noticed, 5 to like 5:30 is like sweet spot for good pre-market trades. Market's not too volatile because it's not too close to opening price or opening time, which is 6:30. And then from here, you get a lot of smooth movement. So you can see this entry here came up at 5:30 a.m., an hour before open. So if you guys do want to trade pre-market, I've seen that these K2SR entries, they hit perfect around this period, basically 5 to 5:30, like an hour before open. So there's an example right there for a buy. Let me see if I can find anything else here. And if you guys have any other questions, feel free to put them in the chat. I'm here to help you guys out. So unless you guys have questions, we'll just continue on with what our schedule is set for today, which is going to be the K2SR rejection examples and the variation V1s as we start to move towards a directional market. So, all right, there goes another example right there. I guess we'll move on to the variations now. Need the high-low indicator for that one. So for the variations, a couple indicators that you need here. And there's a couple other things that I added to it. So like you guys have seen me identify things lately where I've been looking at the overall direction confluences. I can't look at this right now because we're back in time. Typically what I do here is I align to make sure that all of these line up. So I look at retail sentiment, and you know how to look at that, guys, right? You pull up daily FX over here. Typically right here, you can see right now, the retail sentiment is currently 65% long. This is indicating that 65% of retail traders are currently buying right now. So you want to do the opposite and sell. So we're looking for sells here. Basically, I'd write here, and just using this as an example, 65% long. So that I know to do the opposite and look for sells. Fundamentals, I do the same thing here. Market's currently closed right now, so we're going to look at the futures data. This is futures right here. It'll be 82 points. So it's negative 82 points right now. So this aligns with your bias, right? Because your retail sentiment is telling you to take sells. Fundamentals are telling you to take sells as well. It's not very strong, but it's getting close to 100 points. Next, I would look at the 4-hour trend, go to the 4-hour chart, look at the trend meter. It's blue. So that's going to be, or I'll go to like current time. Let me just go to current time right now. All right, so this is current time. Looking over here at the trend meter down below, you can see it's red, so I'm going to put bearish. Go over to the 1 hour. You can see it's red as well. Bearish. Looking down at the 30-minute, it's blue. So I'm going to put that as neutral. One thing that I would do here, so for example, if it's neutral, but it looks like it's going to be bearish because you can see prices below the pivots. Pivots are angling down, red pivots over green. I'm just going to put neutral bearish so that I have an idea that it's neutral now, but it's probably going to be bearish, if it continues to drop lower. Going over to the 15-minute, it's bearish right here. It's also red. And lastly, the 10-minute chart over here, which is also red. And that's going to confirm a very strong bearish bias. So I don't typically, like, this isn't a requirement, but for me, I'm a very conservative trader. I only want to take trades when I'm like 100% sure it's going to hit, right? I don't like losing trades. I don't like giving guys bad trades. So typically I want to make sure that I'm 100% right whenever I take any trades, especially if they're official trades. So with that said, looking at these confluences right here, you can see that retail sentiment 65% long, indicating that we want to do the opposite and sell. So this is going to tell us to sell. This is long-term bias. Fundamental bias right here as well is 82 points in the red. So this is getting close to our 100-point threshold. So this is also telling us to take a sell. 4 hours is bearish. 1 hour is bearish, 30 minutes neutral bearish, 15 minutes bearish, 10 minutes bearish, right? With all of these lined up right here, what are you going to look for? You're going to look for sells. There's no reason for you to look for any buys at all, unless you're gambling, right? So if you guys have all of that lined up there, this is where I would use this as my confluence when looking whether to take variations or not, right? If I see this lined up like this, then I'm like, okay, for sure, I'm going to look for sells here on variations because price is going to have to retrace. But once price is done retracing, it's going to have to come back down at some point, right? So with that said, I'll just show you an example here. Just going to rewind, take some stuff off here to clean up. I know this is probably not an entry right now, but you're just using this as an example. So like say, for example, everything here was bearish, right? And we have an entry right here. This entry right here would be a V1. If you guys are not familiar with the variation V1, I'll put the requirements right here. So first you want to confirm overall bias, right? In order to do that, you can just use this right here. Use the overall direction confluences that I line up. And this is going to tell you which direction to trade. Obviously, I showed you here that we're looking for sells. Everything lines up perfect. The 1 minute trend isn't as I mean, it's going to be useful, but it's not going to be super necessary, right? Because if you're looking at long-term trend, the 1 minute is going to follow if everything's bearish. So with that said, overall bias is bearish here. Obviously, we just went over that. You want to confirm the high low using the K2 high low indicator. So like, for example, if there's no indicator right there, you turn it on and you want to identify the high low. So there's a high here, low, high, low, high. So this is the high right here, right? Since we're looking for a sell, you're more focused on highs because you're looking for the reversal to happen. So with that said, you confirm the high low right here. You can confirm both if you want, but since you're looking for a sell here, this is really what's important, right? This doesn't really matter too much. Or there's another entry right here actually. So I'll go back to that later to show you another example, but we'll just go over this right now because we're already here. So first, confirmation, confirm overall bias, obviously it's a sell with the confluences right here. Second, confirm the high low. There's a high here, low right there. Confirm the candle following the high low is a double wick or double body. It doesn't necessarily need to be both like right after it, but it can be the one before it. I might have to change this requirement here because it says confirm the candle following the high low, but realistically it could be either one. It can be before it or it can be after it. And I'll show you an example of this right here because there's another entry right there where it's not after, it's actually before it. I mean, it's not before it, it's actually after it. So with that said, first requirement met, we have a bearish bias. Second confirmation, we have the high here. Third confirmation, we want to confirm that there's a double body. You can see that there's a double body right here. In order to confirm this, because I know sometimes people make the mistake and misidentify that it's a double body, what you can do here is just click on the horizontal ray tool. If you're like not sure, just click on that tool, click on the magnet tool, and then go to the high right here, right? Go to the body, click on that right there. And if they line up like that, then you can clearly see that it is a double body rejection, right? So with that said, we have the double body rejection right here. You want to confirm there's a pending momentum in the direction of the trade. In order to do that, you're going to look back at the previous momentum signal. So since you're looking for a sell right here, you need a pending momentum for a sell, right? Because you want that momentum to push down. And even if it does fill, it'll go right to your TP. So once you've confirmed all those things there, you can enter on the open of the following candle, which would be right here. As soon as this candle closes, you can enter this for a sell. TP is going to be 100 pips. Stop loss is going to be 300 pips. You have that set up. You let the trade run and full TP right there. This is why you want that pending momentum. So if I go back at one candle again, you can see that when that momentum candle came up, you can see it didn't close, but it did come up, right? So when it closed, when it came up, it pushed the price so far down that it blasted right through your TP. There's like little to no drawdown here at all. So this is going to be an example of a variation. Another example is right here. I'll just go back real quick. Pretty much the same setup. Confirm the overall bias. We're going to say it's bearish here. We can't say for sure because this is, about 2 hours ago. So I don't know if bias was back then, but I'm pretty sure it's still bearish. But looking over here at the overall bias, bearish, confirm the high low. Again, there's a high here, low right here. Since you're looking for a sell, you only care about the high. You can do the same thing I did earlier. You can draw a line there, horizontal ray, use the magnet tool to confirm if it's actually a double body. And you can see again right here, the bodies line up. This is a double body rejection. The reason why we look for this is because these double bodies are reversal patterns. So for example, if price is going down and it's going back up, but the overall bias is bearish, Once you see this pattern here, you know price is going to come down, right? Because it's going to go in the direction of the bias. So once you have that lined up, same thing. You take the trade here when this candle closes. You set up your TP stop loss, 100 pip TP, 300 pip stop loss. You have a pending momentum right here. You know it's going to be a sell because this candle right here is a buy signal. So the next one has to be a sell. So momentum is swung down, it's swung up, and it's going to have to swing back down. With that said, you let the trade run. And then again, right there, another full TP. With the momentum here, since it was pending, you can see the reversal pattern and the momentum push it right back down, and it blasts right through your TP with like basically no drawdown. So this right here is an example of the variation V1. So if you guys have any questions regarding that, you know, feel free to put your questions in the chat. Otherwise, I'll try to find some more examples here. However, it's going to be hard for me to really show examples that are not real time for the variation V1 because we can't confirm the overall confluences, right? Because the farther we go back, the farther we go back from real time is, you know, this could be different. Like, I don't know what the bias was earlier today because I wasn't trading at all. But I'll see if I can find another example and just continue showing you guys, you know, what to look for here. What we'll do here is we'll just assume the bias because we can't really use it right now. But I'll show you another example of like what these V3s look like, or V1s actually. Looks like there's one right here actually. So let me go back over here. You know, again, we can't confirm the overall bias, so I'm going to turn this off real quick just so there's no confusion here. We're just going to assume that the bias here was bullish or bearish or whatever you guys want to consider it. And this is just for demonstrational purposes. These are not official entries that I can confirm because I wasn't trading during this time. The only time I can confirm is about if it was actual real time, is we can confirm what the overall bias was. So yes, CT said that last trade was an SR high low pivot low of confluence FY at 530. Oh, gotcha. Yeah, I'll go back to that in a little bit, CT. So once I'm done with this, I'll go back to that. But yeah, no, CT brings up a good point. Like if you have a confluence of multiple strategies, it's likely to hit, right? So like for me, I identified it as a K2SR rejection, but if it was a high low and a pivot scalp as well, then you have like a super entry there because you have basically a triple confluence. If you guys are familiar with the triple confluence, it's basically 3 different strategies aligned on one candle. And that kind of sounds like what CT identified there. So we'll go back and look at that later. But let me just show you a couple more examples of these V1s. So we have another low right here. And this is going to be an example for a buy. Because when you're looking for double body or double wick rejections from the bottom, you're looking for buys. If you're looking for a double wick or double body from the top, then you're looking for a sell, obviously, right? Because if you get this on the bottom, this is a reversal pattern. So if price is coming down and you see something like this, this is going to confirm that price is going to likely reverse to the upside. So we're going to just assume that the overall bias was bullish here. I can't say what it was or what it wasn't because I wasn't trading during this time, but we're just going to use this as an example. So first requirement, we're going to assume that it was bullish. Second confirmation, you want to confirm that you can identify the high low. So we have the high here and we have the low right here, right? Since we're looking for a buy here, this is going to be the one that we're going to focus on. Second or third confirmation, confirm the candle following the high low is a double wick or double body. As I mentioned before, it doesn't have to be after, it can be before it. So any candle right next to a high low, if it's a double body or a double wick, it's likely to continue in that direction because it's a reversal pattern. So we have the double body right here. If you need to confirm it, pull up the horizontal ray, use the magnet tool, go to the body, drop it down right there, and you can see that they line up, right? So with that said, we have the requirements here met. Fourth requirement, you want to confirm that there is a pending momentum in the direction of the trade. So right here, we have a sell signal. This confirms that the next signal has to be a buy signal, right? So with that said, you would enter this for a long position right here. Set your TP stop loss at 100 to 300. You have everything lined up right there. You let the trade run, and there you go, full TP. And this is why you want the pending momentum, because when you have a pending momentum like that, it blasts right through your TP with little to no drawdown at all. So there's an example for a buy. We have another example right here for a sell. Actually, let me see if it's a double. No, so this doesn't fit the criteria. It's not a double body. It's not a double wick. Thought I saw one here. I was trying to see if I could find an example here for a double wick, but I don't really see one here. I mean, there's a lot of examples here. If you keep going along right here, there is another one right here. And you can see that there's a, so if you guys ever want to practice this strategy and you want to identify these high lows where you get a double body, just look at all the high lows and just circle them, right? If you can see right here, this is a double body, right? So if you were to take that there, all requirements, say all requirements are met, 10:30, you let the trade run, full TP. Going back to the next one over here, you got the same thing again over here. There's a low right there. You can see it's double body. Say all requirements are met. Take that for long position right there. 10:30. Let the trade run. Full TP. So there's a lot of entries here. I didn't trade during this period, but I mean, just looking at it right here, there's a ton of entries that could have been taken. And this is just me looking at it from a bird's eye view, right? I didn't trade during this period, so I can't say what the market was looking like around this time, but it was looking kind of crazy. So not exactly a time that I personally would be trading. Again, right here, double body. And I'm just showing you guys examples here. Like, not that I would take these trades, but showing you guys what is possible, you know, if you practice and learn these B1s. Again, right here, we'll just assume that that bias is bullish. You have a double body right there. There's a low. It's right next to it. Let the trade run. Pending momentum for a buy. Blast right through it. Full TP right there. So this strategy is super easy. This is why this is one of the favorites that a lot of people apply. The K2SR is probably like the very accurate, but it doesn't come up as often. The B1s come up very often, but they're not as accurate. That's why you need to follow the requirements. They're accurate, but you know, only to some extent. You know, there's going to be some days like this where like every entry is a full TP. Like again, right here, another one. There's a high. You can see it's a double body. Double body right there. We'll say it's bearish. Double wick rejection, pending momentum for a sell. Take the sell right there. Let the trade run. I just showed you an example like within the past couple hours, and there's probably like a ton of entries here that you could have taken. Again, right there, set up, lined up, let the trade run, full TP. So this strategy is definitely one of majority of people here's favorites, one of my favorites as well. And it's the reason why I'm applying the strategy now alongside with the K2 SR rejection. K2 SR rejection is going to be like the main strategy right now because the market is still moving kind of crazy. But when it starts to move very directional, the V1 is going to be like our go-to, because you can see that so many entries came up within a short period. You know, if you took all those entries, you could have made a ton of profit within a very short time. What I'll do right here too is I'll go back to that trade at 5:30 that CT was mentioning. So there was that trade there that I was talking about. I think it was the next candle. Yeah, I think it was this one right here. So I'll go and mark up the zone right here again real quick. So we got the zone right there. Wick rejection right there. Let's see. CT said there was one. Oh, it was this one right here. Okay, so I think CT was mentioning this one there. So the one right before it, and you can see that these trades kind of come in bunches. So there's actually a high-low scalp that was right here on the previous candle. There was one entry that was right there, and this one pulled back a little bit, and it blasted right through it. So there's a couple entries here that came up. There was a high-low scalp that was right here. If you guys are not familiar with that strategy, it's another favorite by a lot of people in the group. Basically, for this strategy here, and we have a ton of strategies. You can see with the list right here. I have a lot of strategies here that you guys can learn. What I probably recommend you guys focus on if you guys are new here, or if you guys are like trying to find something that like works all year round, would be the SR rejection, right? Because this one, it doesn't I mean, it comes up pretty often, but like not as often as the others, but it's way accurate. So if you're patient enough to wait for this entry to come up, it'll typically always hit. And the good thing about the strategy is that it works for all types of markets, directional markets, ranging markets, consolidation. This is pretty much what we applied all summer. We were pretty conservative with our entries, but it played out perfect. And we didn't really have too bad of a summer. If you look at the results for this summer, I mean, they weren't great, but they also were not like super horrible, right? So like, for example, over here, September was kind of slow. We only made 400 pips that month. August was 1,500. You can see like from the earlier months, we were applying a lot of different strategies. So we had a lot of opportunities to take trades. But then around summer, typically the market slows down because a lot of the market makers and institutions are out of the market. So they're on vacation, and that doesn't allow us to take too many entries. So you can see right here that the profits here were like a lot smaller compared to like earlier in the year. August was like 1,500 pips. September kind of slowed down a bit, obviously. Market got kind of crazy. And then now we're starting off October. So when the market starts to move directional, which it typically is, let me see if I can check over here real quick. So I'm just going to mark up. I mean, today's not a good example, but I'm going to mark up the market for today. The reason why today's not a good example is because today was a holiday. So you're not really going to see that directional push that we are looking for. So 6:30 to 8 is typically when we trade. You can see here that the market was bearish though, overall. Put that marked up right there. So you can see like between the first couple candles over here, price was just consolidating for a bit, right? But as soon as price figured out its direction, it never came back up past opening price. It just came up and retraced, but then it came right back down. And then a lot of consolidation all throughout the day. So, I mean, this would still be kind of considered a directional move because price never came back to opening price. A lot of people like trading that back to open. You guys will probably hear a lot of people talk about that. That back to open stuff happened. It works decently during certain conditions, but like when the market's moving directional like this, you typically don't want to write it back to open, like because price will retrace up. It won't necessarily go straight to open. It'll go close to it, and then it'll just continue back down. So, in a situation like this, you'd be looking for a reversal. So like, for example, we already knew price was dropping. What you would do here is you would look for some variations. So let's see, there's a double body right here. Reversal pattern. Price came down super heavy after that. Price came up, double body right there, came down super hard. So one right there. I think that was about it. That was like, this is where it started. If you could have caught this V1 right here, or this reversal pattern, it was either a V1 or a continuation that Maddie applies. This would have been the entry point. You would have seen a double body there. You could have had your stop loss right there, and you could have just wrote this down quite a bit, 1,000 pips. Sometimes, like if you see a really good entry like this and the bias is so strong for a sell, you can go for like a 2-to-1 or even a 3-to-1 in some instances. I mean, this right here, you could have held it for a long time. I probably would have done like a 2-to-1 or 3-to-1, something like that. 2-to-1 probably, because I don't like taking too much risk. So I'd probably go for like 1,000 pips right there. That would lock me $1,000 within a few minutes. But yeah, I mean, so yeah, if you guys are looking for strategies that will be very reliable all throughout different types of market conditions, it would be the K2 SR rejection. Let me see if I could find an actual entry here that came up, because I'm pretty sure there's probably one that aligned with this here. Let me go back a little further. So there's no zones around this area. Maybe if you go on the higher time frames, at 10, there's nothing there. 15, 30. So it looks like there was a 30-minute zone right there. I guess, I mean, would have aligned. Let's see. So there's like one right here and one right here. Going back to the 1 minute. So the only entry that I could see right here would have been down here. So you probably would have missed this unless you saw the variation or something, but there's a couple SR rejections down here if you're using the higher time frames. So there's probably like 1 or 2 trades here that could have been taken. Yeah, there's like one right there and there's another one right here. Both would have been full TPs. But yeah, let me see if there's anything else right here. Yeah, no, CT said the pivot one was a candle earlier, but still confluence. Yeah, no, definitely CT. And that's something that you guys can look for too. Like what CT identified here at 5:30, there was a couple different entries. What happens a lot of the times is these trades come in bunches, right? So like CT over here identified the high-low scalp, which is right here. Right after the high-low scalp, price kind of retraced down a little bit, which is fine. It happens. Price did retrace down a little bit right here, and then the SR scalp came up right here. So that's like 2 entries right there, and then price just like pretty much skyrocketed from there. So they come in bunches. Like whenever you see an entry, like look, like continue following the candles, because typically another strategy might line up right after it. Because a lot of these strategies go hand in hand. Like the high-low scalp is like a continuation strategy, and then the SR rejection is a retracement into continuation. So price retraces, bounces off the structure, and it provides another entry for you to take there. See, Jonathan said it reminds me of the 10-minute snipe strategy. Yeah, no, exactly. The SR rejection is basically like a dumbed down version of a snipe strategy. If you guys remember the snipe strategy, we would apply that on the 10-minute chart. The problem with applying that strategy is that you need to find a directional market, and we haven't been in a directional market for like the past 3-4 months. So if you're looking for that specific strategy, you're looking for something like, and I'll see if I can find one here. So let's see. See, the problem with this here too is that we don't have the overall bias. That's the difficult part about this, because in order for us to look for those types of entries, we need to identify the overall bias. So I think there's like one right here. Let me see if I can find one. I can only tell that the bias here was bullish at this time because it was like green for a while. So I'm just going to use this as an example again. I guess we could use this here. So if you guys are familiar with the K2 SR rejection, or not, sorry, this is the snipe strategy. I'll just do that to clean it up a little bit so you can see a lot better. So here's the snipe strategy requirements right here. We don't know what the overall bias is, but just looking at how price was bullish throughout this period, we can assume that it was bullish, between this time period, because it continued pushing up. So we're going to assume that we had a bullish bias, confirm a wick rejection off structure. So again, this is the same wick rejection that we're looking for in the K2 SR rejection, right? You're looking for a wick rejection off the K2 SR zone and the K2 pivot. So the only difference here is that we're not using the pivot because it's just too many requirements on the 1 minute. So basically, if you wanted to mirror this with the K2 SR rejection, you just take off this requirement here, and take off this requirement here. So we have a wick rejection off structure, wick rejection off the K2 pivots, confirm that the wick projecting off pivot does not touch the candle body. Body's up here, pivot's down here. Clear rejection off here, but it's not touching the body. You confirm you're trading in the direction of momentum. Right here we have a buy signal, trend meter is green. Everything lines up. You take the trade here for a buy. Let the trade run. The reason why a lot of people like this strategy more is because it's a 1-to-1 risk reward, right? A lot of people don't like the negative risk reward because they're always worried about the trades. But if you trust the strategy and you know that it actually works, then you have no problem trusting it. The only problem with most people is that they don't practice it enough to understand that it actually plays out. So with this right here, everything's lined up. You let the trade run. Price pushes up into profit. Blast right through your TP with no drawdown. So you can see here that this is a little bit of a more complicated strategy, but it's basically the same. It's the same logic. So you're looking for price to push up, retrace, reject off structure here, and you're anticipating a correction back to the upside. So it's literally the snipe strategy with less requirements. Since we're trading on the lower time frames, we have to take off a couple of requirements, because if we have all these requirements, we'll probably never have an entry. So, basically take off the K2 pivot requirement and you take off the, pivot touching the body there. So yeah, I mean, if there's any other questions or if there's anything else that you guys want me to focus on, feel free to let me know. I think this is the main stuff that we'll be applying for the next couple of weeks. That's why I'm focusing mainly on the K2 SR rejection scalps and the variation view ones. As the market starts to move a bit more directional, then, of course, we'll start applying more strategies. But right now, at the moment, this is going to be the main focus until we can confirm that price is actually moving consistently in one direction or the other. So let me see the breakout today. I can't remember. Well, I mean, I didn't trade today, so I have no idea what the bias was this morning, but I'm assuming it was bullish. Actually, for the breakout, it doesn't even matter because we don't use. Let me go to the breakout real quick. I mean, yeah, I guess you confirm the overall bias. So I don't know what the bias was because I wasn't trading this morning, but let's see if we can find it here, what the entry was. It looks like the entry would have been possibly this one right here. I mean, this isn't really a strong candle though. The problem is that these candles are so huge as well. Yeah, unfortunately, I can't go over the breakout. I wanted to see what the breakout was today, but I don't know what the bias was for this morning because I didn't trade. So I'm assuming this would have been the entry right here. Actually, no, I wouldn't have taken this because the wick on top's too big. And the wick on the bottom is too big too. So it's a uncertain candle. Keep going along. There's no strong green candle there. It's not a strong green candle. Again, right here, the wicks are too big on both sides. And this would be the threshold. So it doesn't look like there'd be a breakout today. This right here, I guess it could have been considered the breakout if you had a bearish bias, but I think the candle's too big. So you wouldn't be able to take it. Yeah, I mean, it's like right there. Yeah, nah. The candle's too big. Typically, you just measure the candle, see how big the candle is. As you can see right here, this is a pattern that always plays out. And this is why you guys want to be careful when taking entries when the candles are too big. Because like, for example, here you can see price, it literally just taps stop loss and then it comes straight back down. So it comes up slightly, like literally taps the stop loss, and then eventually just comes right back down. So when a candle is big like that, you typically just want to hold off on it. So for the breakout today, there was no breakout, or it doesn't look like there would have been. This entry would have came up at 636. You have to notice the note over here. It's only valid for the first 5 minutes. So market open here at 630. This entry came up at 636. Definitely too late. So would not fit the criteria. The 3-minute daily over here, I had this marked up earlier this morning because I was on the charts earlier this morning watching the charts to see how things would move. And this right here actually was the so actually I did have so I was looking at the market this morning. I wasn't trading, but I was looking at it. I saw here that the 4-hour trend was neutral bearish, 1-hour trend was bearish, 30-minute was bearish. So it was actually bearish this morning for the most part. Some of the short-term trends were bullish though. So it wasn't like aligned in one direction or the other, but long-term right here, it's for a sell, 64% long. Fundamentals were up, so that would just kind of conflict with each other, but the trend over here was pretty bearish. So I marked this up here for the daily on the 3-minute. This hit full TP, and I also marked it up on the 5-minute over here, which also hit full TP. So I was looking at the charts this morning. I wasn't trading, but I was looking at it, and it looks like yeah, I mean, it looks like it was bearish from like 6 to 8 or 6:30 to 8 because I already had it marked up right here. But yeah, guys, if you guys have any other questions, feel free to put your questions in the chat. I pretty much covered the stuff that I wanted to cover today. If you guys have anything specific or you guys want me to cover anything else, feel free to put your questions in the chat. We've been on this mentoring session for a little over an hour now. I started a little early today. So only a few people were in here earlier, but if there's anything else that you guys want me to cover, I'm here to help you guys out. But I think for the main focus for this week would be on the variation V1s, as long as the bias here is all the same. So what I'm looking for here in order for me to take the V1s is I'm looking for retail sentiment to be over 60%, looking for fundamentals to be over 100 points, whether it be a buy or a sell, or green or red. And then this is going to be the main focus because we're looking for these short-term moves. So the 4-hour trend, I want the 4-hour, 1 hour, 30-minute, 15-minute, and 10-minute to be aligned. If they're not aligned, then I'll still look for entries if it's pretty strong. Like say, for example, the 4-hour is bearish. So say, for example, everything here is bearish, right? Say everything's bearish and the only one that's bullish is like a 10-minute. If I see that there, then I'll look for V1s for a sell, because this is going to indicate that, okay, we're probably going to be looking for some sells here because price is likely to continue dropping if that becomes the case. So for the V1s here, I haven't told everybody this. I'll explain this again tomorrow. If everything here aligns, then I'll be looking for V1s in that direction. Otherwise, my main focus is going to be the K2SR rejections for time being. Other than that, let me see, So Jonathan said, I noticed that mastering 1 or 2 strategies to fit your trading style is best, especially if you can trade in any market conditions. Yeah, exactly. And I agree with you too, Jonathan. So my main advice to you guys is if you guys are looking for something that's very consistent and something that will likely yield you a lot of profits in the long term, you guys got to think about this in the long term because, it's easy to get lucky, but how lucky can you get until you blow your account, right? You want to make sure that you're staying consistent and you guys are taking quality trades, not just taking every single trade because, yeah, sure, you'll have good days and good weeks or good months where you'll win every single trade. But once you get into that downward spiral, which I see a lot of people get into, it's hard to get out of it because you guys just keep changing strategies. So what I recommend you guys do is focus on 1 or 2 of the strategies that we follow. And my main 2 that I'm looking at are the K2SR rejection and the V1s. You can learn whatever you guys like, but I think those are the best ones and the easiest ones to really master as long as you guys put in the work and focus. But yeah, I think that's about it. Unless you guys have any other questions, I'm here to help you guys out. Otherwise, we'll be back tomorrow for the next live session, or the first live session for this week, to officially kick off the trading week. Let me check the calendar right here to see if there's anything tomorrow. So we have these IMF meetings. I don't know what they are. Let me check real quick. So IMF meetings are usually held twice a year, attended by the representatives of IMF and World Bank meetings. Okay, so basically just the International Monetary Fund. So international economics. So we got that meeting going on tomorrow all day. We have news for Fed member Mester speaking at 9. It's gonna be after the live, so it's not a big deal. We have tentative news here, IBD, TIPP, economic optimism. It's just typical stuff that we're going to be covering. So not too much news tomorrow. Wednesday, we have PPI, so we have inflation news. PPI and core PPI news coming out at 5:30. We got 10-year bond auction at 10. So a lot of this stuff doesn't matter to us because we're not trading around that time. But the main thing here would be the inflation news pre-market. So keep an eye out for that. It's probably going to cause price to spike around a bit. Going down to Thursday, some more inflation news. We have CPI, core CPI, unemployment claims. So we got a lot of big news coming on Wednesday and Thursday. And then Friday, we're going to wrap it up with core retail sales, import prices, and prelim UOM consumer sentiment, prelim UOM inflation expectations. So basically a bunch of inflation news coming out all week, which could be a good thing or it could be a bad thing. Personally, I think it'll be a good thing because it will spike price around a lot and it'll cause volatility to really pick up, which is good for us because we're scalping. We only want volatility, like we want volatile markets. A lot of people don't like trading in volatile markets, but I love it because you get in and out of the trade within a few seconds, few minutes, and then you're done for the day. Taking 1 or 2 good trades during these high volatile times will really pay off. So here's a problem. I see a lot of people make money on the lives and then they blow everything after, right? The thing that you guys got to keep in mind is that this volatility is good if you use it for good, right? Not necessarily gambling. So if you guys make profit on the lives and then you guys are cool with it, then I would just call it a day, because we have inflation news all week. So you can probably lock in 2 or 3 trades on Wednesday. We have a lot of inflation news pre-market. Thursday, we got some more inflation news pre-market. So you're gonna have high volatile. You're gonna have a lot of volatility in the morning. And then Friday, we're gonna wrap it up with some more inflation news. So if you guys don't catch anything tomorrow, don't be worried, because the market's going to pick up pretty heavily on Wednesday, Thursday, and Friday. And you also got to keep in mind that it's a holiday week. So a lot of BS happens, especially on the day after. So the first day of the market, when it officially opens, you're going to see a lot of weird movements. You just want to make sure that you don't get caught in the bad movements. So, all right, guys, I think that's it. It's about to be 3 o'clock. So we've been on this mentoring session for over an hour. If you guys have any other questions, feel free to put your questions in the chat. Otherwise, we'll be back here tomorrow at 6:30 a.m. or before that for the official kickoff of the trading week. So other than that, if you guys have questions, feel free to message me on Telegram. That's probably gonna be your best option to reach out to me and get whatever help you guys need, because I can respond to you pretty quickly. Otherwise, if you guys want to email me, you can email me at sean@kodikaitrades.com. Also, if you guys are new here and you guys want access to the K2 indicators, I know some of you guys are new here just watching the streams on YouTube. If you guys want the indicators right here, where you guys can apply these strategies, learn all the strategies on your own, that is also available to you guys. Just go to the website, kodikaitrades.com, and then you can unlock your access there. So, all right, guys, I think that's it for today. If you guys have anything else, we can pick back up on the live session tomorrow. Even if the live session is pretty good tomorrow, maybe I'll stay on even past 8. So we'll see. I just don't want to force it. So we'll pick back up tomorrow, guys. And if you guys have anything else, I will talk to you guys till then. So see you guys tomorrow morning.